Hello everyone. So today I'll be talking about how I trade and concept of inducements, or let's say inducement principles. So you know, firstly, we're talking about inducement principles. See, or rather, how I trade. That'll be much more better headline. And so, in if you want to trade inducement principles, you need first. I think the first thing you need to do is identify the trend of the market. And find the trend of the markets. Then the next the next is your your current position. What I mean by current position in the market is, I think market has sorry, let me close this. Yeah, yeah. So market has, I think, uh in a trend. Yeah, market has two phases, sorry, in that trend. Market has the PT run and the CT pullback. So you have to know what I mean by PT run is the full trend run, or and CT pullback is the counter trend pullback. Once you have identified where the market is, the the range at which the market is at that point, you look for, normally what I do is I look for previous uh, price action history on the higher time frame. So you look at the higher time frame perspective. uh, Perspective. Look at the higher time frame perspective. So you know if price has tapped into a higher time frame supply zone or a demand zone, just to be sure where, okay, price if price starts, let's say price is is an uptrend, and on the higher time frame now, price tapped indicated a higher time frame demand zone, and its price is here. We know that we are at this level here, which is potentially a full trend run. So potentially you're looking for price to pick out this week high, this week supply area here, for that they're looking for price to, for as a result of that, to pick out this high here. And then where inducement comes in, inducement is basically uh, as is basically liquidity. You understand? Liquidity explained in, sorry, let me use the text box. Liquidity explained in layman's terms. Liquidity explained is in a bullish scenario where price forms lower high, then lower highs, and higher highs and higher lows. We have something like this. What we mean by a liquidity graph is when price comes down here and sweeps a previous demand zone or demand area and then breaks structure. So this in turn was a liquidity sweep. Right here was a liquidity sweep, a sweep of liquidity, because price, or what you call a fake break of structure, whatever you call it, because price, though most of the times price are either weak or close the candle below it and then engulf that bearish candle that was closed below it, or price weak it on the higher time frame and then go change or break structure bullish. So liquidity, all of the players that had amassed their buy orders here would have been taken out by this move here, and then they will use that move to fuel the pro trend run, taking out the structural high. So that's the okay on the in the bearish scenario now. It's basically the same thing. Price is forming lower highs and lower lows, and then price now comes here and sweeps this lower high and then takes out the structural liquidity or the lower low. So we confirm that the liquidity has been swept on the bearish market, on the bearish scenario. But normally I don't trade this. I don't usually trade this. I I use this is something that I keep in mind, or I keep in check, just to confirm that yes, this zone is going to hold. And let's just go straight to inducement, because I didn't really come and speak about the basics of market principles. So inducement now. So how I trade inducements. Inducement is, take for example, find price in a bullish trend on the higher time frame. Price is bullish on the higher time frame, and then if you, let's say on the daily, the price is bullish, and then you go down to the 4 hour, and we see that price is forming series of, price now changes to a counter trend pullback and it's forming series of lower highs and lower lows. So we know that here price is in counter trend pullback phase, and after some time price now, let's say, taps into a demand zone and then takes out the structural liquidity. So this is the first phase of of identifying inducement. So the first is price is in an uptrend. Yes, this is a break of structure. Price then takes out structural liquidity at this high, gives us a new high. This is the new low. So this is the price range. This is the price range. So in theory, if price breaks this low here from this high, we know that price may have changed character bearish. But when price is still within this range, we know that yes, price is below 50% of this range. You know, price is at discount and will potentially buy from a demand zone around this area. Or price is up here, price is at premium and will potentially sell to a discount level to buy from. And then how inducement now, in tech view, how inducement forms is price will take out at least two highs in a bullish trend, two highs, or yeah, or two or more highs rather, and then give us, once the structural liquidity is taken out or around this area, around the second high, price will then, or let's use three highs, but two highs or is fine. Price will give us an inducement leg or a pullback and then break structure again. So this right here becomes my inducement leg. This is where the structural liquidity or inducement leg is going to be taken out. And we expect, as price has given us this high here, price to come back and sweep this 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 higher low, and forming or tapping into a breaker block, an order block, or a fair value gap, the FVG, and then react to the upside, causing causing a continuation on this bullish trend. So price will be in an uptrend in the counter trend pullback phase. When price starts the pull trend run, is going to break two or more highs, form a pullback, break structure. Always note that the price must break structure after the pullback. Price will break structure and then come and the sweep the low that broke that structure, and then after he sweeps it, it's going to continue the pro trend run bullish. But my entries now mostly happen around this area. Take my entries around this area, and how I take my entries are, let's see, highlighting this area here, highlighting this area. So it's something like this. When price takes out the prior low on the lower time frame, as per 15 minutes time frame, there will be like, okay, let me do something like this. There will be a something like this. This leg now takes out the previous or the engagement leg, and then it breaks or forms a minor engagement, and then breaks structure to the upside. And then now when price does that, break structure that, or not break structure, change of character, yeah, when price does that, I'm going to wait for price to tag or come back to this minor engagement. Then my target will be the higher time frame, here, the higher time frame structural high that was formed. That's where my target will be. So this will be my entry zone. This will be my entry zone, and this is where my stop loss is going to be. So this is the textbook view of how engagement works. Then let me use a trade that was taken. Here's the right trade. Yes, this one. So I think I missed a trade here at first. This one was missed, but let me also use this one in context. This was on the 2 hour, I think. This was on the 2 hour. 2 hour. So price was first bearish. Like this was on the higher time frame. This was an uptrend. So price became bearish. Lower highs. The counter trend pullback started. So, and then around this area, let's say price tapped into a prior demand zone. But we know that there is supply and demand everywhere in the market. We don't know the one that is going to be mitigated and going to hold. So when price did that, price first took out the first high, gave a pullback, took out the second high, and then give an engagement leg and broke structure to the upside. So then broke structure to the upside. So after price did that, once price has given me the engagement leg is high, I'm going to wait for price to come back down and weak this engagement leg. I'm going to wait for price come back down and weak it. Either tap into this is a rejection block, yeah, or a breaker block. Either tap into a breaker block, a rejection block, another block. Once price does that, once price weaks it, price is going to break or change character. Once price changes character, it's going to come back down. I'm going to wait for price on the lower time frame. So let me be for 5 minutes now to really explain my entry. Once price changes character on the lower time frame, there will be, let's say, I think on the 15 minutes, that's where I took this entry from. Yes. So price has whipped out the engagement leg, and then this is an order block. This is an order block. The last sell candle before the buy is an order block where price is going to mitigate, and then my target is going to be this high here. But this failed. This trade here failed. So my stop loss is going to be just below this low, and then my take profit is going to be at this high here. That's about 27 arrow. But I think price on this trade gave me about 20 arrow, and the Bank of Japan intervened about 24 arrow. That's what price gave me before moving back down. Before this happened, this was an engineered sell by the Bank of Japan. So that's the first trade. And then the second one I want to show is here. After the supposed engineered sell by the Bank of Japan, something happened. You can see that price is also bullish here. Price made a counter trend pullback, and in the process formed two higher lows. I mean lower highs. Sorry, formed two lower highs. Then price now started after tapping to, let's say, a fair value gap here. Price then started moving in the potent direction, broke the two prior high structure, formed the engagement leg, and then broke structure to the upside here. After breaking structure to the upside, the price went on. This was the engagement leg's high. You understand? That was the engagement leg's high, and then after the engineered sell now whipped out this low here. If you check on the higher time frame, the daily time frame, you can see that where is this? Yes, yeah. You can see that this was a bearish candle and then a bullish candle or bullish series of bullish candle engulfed it. So this was a week, or even on the weekly, since it was a 4 hour move. On the weekly candle, you can see what price is. Price whipped it out and then change character around this area. So you can go back down to the 4 hour. So you can go back down to the 4 hour. Price whipped it out, change character, and then came back to tap into something I didn't see. There are two types of inducements. There's the candlestick inducement and the pullback inducement. So on the lower time frame, what I tend to take for trades like this is the candlestick inducement, just like what I did the last week near the POI. So this was the inducement leg originally. This was where I'm supposed to take my trade from here. This was where I'm supposed to take my trade from. But I normally use this last week because of on a much lower time frame. This will be a bullish move, a pullback, and then a break of structure. So you can also use this as your engagement leg. And then either you take a trade from here, but you're not going to be sure which of the sweeps is going to occur. But once it switch and change character, you then know that yes, this zone has a 80% chance of holding. And after price changes character, the pullback, you're going to enter on the engagement, the last engagement leg, the lower time frame engagement leg. Your stop loss is going to be below this protected low, the sweep low, and then the target is going to be the structural high that was formed by this engagement. Today the structural high, and this is about 37 hours on the field. Yes. So what was the price has been very bearish on Bitcoin, but right here, price tapped into a very old, a very old, what I call it, a very old breaker block on the 59k level. And in relative terms, this was the first break of structure. This was the second break of structure. This was the engagement leg that was formed that has been swept. So I think in months to come, price is going to take out this 126k. But this was the first break, second break, and then this was the engagement leg. And price now tapped into the breaker block right here, and then gave a bullish engulfing. But that's the higher time frame structure. My my analysis now is based off of the 4 hour. So price gave a change of character here. A continuous break, a pullback. This low hasn't gotten taken out yet. A lower high here, a lower low here, a lower high here, a lower low here. So this is confirmed. We confirmed two highs. This is confirmed two highs. After the two highs were taken, an inducement leg was formed that also broke structure to the upside. And after it broke structure to the upside, the inducement leg now was weak right here on the lower time frame. I mean, sorry, on the higher time frame. And then it changed character bullish. After that, my entry was taken here. This is about 12 hours, but I missed this entry, so I'm taking a second entry with the same higher time frame narrative on the 15 minutes. So on this higher time frame narrative, this is I'm taking it based off of this inducement leg here. This is an order block, a valid order block with an inducement that broke structure. This is an inducement. So I'm taking my trade off the last week, and then my stop loss below this order block. So this is a 15-minute trade that I've already placed the order. So if it works, I'll get this is about 22 R, a higher RR than this, which is a good thing. But I wish that at least this, I saw this very late. I saw this when price was already triggered, and it's not good to chase price, because if I entered at market price, that was around here where it was yesterday. If I entered at market price, it would have been a very bad risk reward trade, and that would, and if it hits my stop loss, it's going to be a more psychologically damaging trade than a higher RR trade. But let's see how this goes. This is my textbook view or explanation on inducement principles. I hope that I will enjoy this video in the near future. Thank you.